Welcome to another episode of the show, and special welcome to the million plus new customers, new subscribers. Because we gain 100, we gain not 100 million would have been too much. We gain 1 million subscribers each week from one episode to another episode, and
Wow,
as
so you're doing really amazing.
of course,
I need to learn a few things from you.
This is the best podcast in the world. You should be honored.
Yes, I am absolutely.
And as you guys would have known, today we are driving in the snowy winters of Milton with our good friend Mr. Fawad. And Fawad was kind enough to make time for us. Fawad, how are you doing, sir?
I'm doing great, son. How are you doing?
Well, can't complain. My back and my shoulders are so tired of shoveling snow twice a week now that I'm just hoping and praying that the snowfall just ends. And as people can see, we still have too much snow on the ground. It's not getting warmer by any means.
That's the beauty of living in Canada.
In my last podcast, I dedicated the snowbanks on the sidewalks to all the people who are dying to come to Canada.
Absolutely.
Right?
Canada is so ready for you.
just whatever you pack, make sure you pack a shovel, a high quality shovel, so that you can just shovel off all this beautiful snow from the side of the roads. But anyway, sir, so how was, let's get into the conversation. How's the market doing, and where are we at, especially with the announcements that the central bank has paused rate hikes?
A couple of really good news is obviously that has helped the market. Market has been moving up, like I said in the last podcast as well, that it's been slowly but it's steadily going up. I think this news of rate pause should help the market. Things haven't changed so much since last week, but again, looking at the current stats for yesterday and the day before, what I noticed that any property that is sold, majority of them were sold over asking once again, and the benchmark was a little bit higher compared to last month. And I see this trend to keep moving in this direction. I think we are in for a good spring market, and this is probably going to be a year where there will be not an insane amount of growth like what we have seen in the previous years, but it should be very slow, but it will be going in the right direction.
Wonderful. But then I think you've in a way covered my next question around, has your outlook for the rest of the year changed? You've touched upon it, but I think it hasn't.
It hasn't.
We are looking at some sort of growth.
Yeah. We are looking at, it's hard to predict, and like I said, once again, that it's not going to be like the previous years, but it should grow around 3 to 4%, which is a normal market. Like if you look at a lot of markets in the world, this is considered 3-4%, 5% growth. It's considered pretty decent. But for us, at least in the last few years, markets have grown upwards of 20% a year.
That was crazy.
So it seems pretty low, but I think it's a healthy thing. Market should move. I mean, the key is instead of like going up and then putting a reverse gear and the prices coming down, you'd rather have a slow and steady growth. And have a very stable market.
Excellent. And I think one of the things that I have observed is finally, I think the central bank has now decided to hold rates. That obviously does not mean that they'll not increase, but that's definitely a hold for now, meaning that it should, I don't think it's going to do any wonders to people buying or selling houses, but it is going to give them some confidence that people with variable mortgages will have some kind of a respite in terms of, hey, your mortgage prices will not go, crazy high, and hopefully if the rates stay, stable, that should be, at least for people like myself, it's really comforting news, right? Because it's really very, very, I would say, bad news for homeowners to kind of pay thousands of more dollars monthly on their mortgages, right? Okay, so with that, let me ask, any particular reason why we are driving on this particular road? Is this your favorite road in Milton?
No, it's not. But where we're driving to, this is a shortcut. So we'll get there soon.
Is that so?
Yes.
All
a
right.
lot of new, beautiful construction. Look at the new
course.
townhomes built by Great Gulf.
In winter, it's difficult
they
to
all
tell
look beautiful,
if it
but-
is new or old because they look the same.
Yes. No. I mean, it's one of the premium neighborhoods of Milton. Very in high demand. Prices have gone up here quite a bit. The best part that I like about Milton, and it's gonna sound like I'm promoting Milton, but this is true. A lot of people from Mississauga. Hassan is from Mississauga, and obviously he thinks Mississauga is doing so much better than Milton, which obviously is not the case. But like, just to make him happy, we'll agree with that. Yeah. So the things that are happening here, the average prices have gone up quite a bit. But anyways, coming back to the point. The rates will help, but I think not only that people will gain confidence, but also in terms of getting the mortgages, getting qualified for them. As I said, even in the last podcast, the problem again is not only the prices, but also the mortgage rates. If people are willing to buy, but they cannot get the mortgages, obviously the market is going to take a hit because of that. And unless we see something in terms of discounts, in terms of something, maybe a government initiative where they're willing to help the first-time buyers. I mean, there are programs that exist currently, but they're very insignificant. The amount of money that's been given to first-time buyers and the cap of buying something under $500,000 obviously is not helping the Toronto market.
Can you buy anything for $500,000 in the GTA?
Probably a small studio apartment, but no, not a lot.
Is anybody making a small studio apartment?
Yeah, no. I mean, maybe some older buildings with a really high maintenance, you might be able to get something for around $500,000. But yeah, in general, like you're not going to get many properties for that much. For that, you need to probably travel a good 30-40 kilometers, maybe up west towards London, which is more like 100 kilometers.
I think on that note, let me
east. Yeah.
Let me ask you this. So, in today's market,
Yes.
considering we are where we are, what would you consider a good investment in real estate? Like, if I have 100K lying around to invest in real estate, what does that get me?
It really depends on your personal portfolio as well. Are you a first-time buyer? Are you an investor? Are you trying to buy a property that you will be living in or you will be renting out? And the reason I'm saying that is you might not necessarily need 20% to get qualified for a property. If you're a first-time buyer, you have a decent job, you have good credit score, you have credit worthiness, you might be able to get something for 5-10% down. And let's just say you buy a new condo for $700,000. All you have to do is probably put 5% down for the first $500,000, and for the next $200,000, you have to put 10% down. So altogether, you're looking at about $45,000 with the closing costs. All the other expenses, probably about $60-65. You should be able to get something decent. But this program is only obviously for the first-time buyers. Second-time buyers, technically speaking, can get qualified, but it's really tough. And as an investor, rule of thumb is that you should be aiming to put 20% down. You can't really count on 10%, 15% products, especially if you will be renting out the property. Your rental income might not be able to cover and have a balanced TDS, GDS, total debt ratios.
Yeah.
For that, you probably would have to go towards outside GTA, outside Horseshoe, more towards, I wouldn't even say Brentford, you probably have to go towards London.
I'm just waving at our friend Ashar Bhai.
Ashar, yeah, unfortunately.
Ashar Bhai.
So no, you need to probably go into a market where there are properties that you can still buy for about $500,000. Actually, more like $450,000, because you do need to have some money left for the lawyer costs, the rental transfer tax. So if you're working with $100,000, your best bet as an investor would be to either book something in pre-construction, because obviously you will be taking that mortgage out at a later date. You don't need to come up, put all 20% down for now. You will have enough time, a year, 2 years, 3 years, in some cases more than that, to come up with the rest of the down payment. So yeah, you can either go into pre-construction or you can travel, let's say about 45 minutes to an hour in any direction.
So this sounds more like a recipe for a good deal for first-time home buyers. What about investors?
Investors, yeah, this is what you need to do. You need to probably go an hour east or west of Toronto, not north necessarily, to be able to get something. And
800K, 900K.
Probably even 500,000-600,000 for small towns, but it has to be towards more like central Ontario. It could be London, Ontario. Actually, London is getting pretty expensive too, but there are some areas east of London, Woodstock. You should be able to get something for about 500 to 600,000.
How far is Woodstock from here? I've never been to Woodstock.
Woodstock is just before London, so you're looking at about maybe an hour and a half from Toronto. So yeah, that's a place. That's a growing market. That's a good market to make an investment in. You can go maybe past London. There are small towns. There are a lot of construction that's happening there.
I thought just the world finishes after London.
No, unfortunately not. Unfortunately not.
Because
I should be saying unfortunately not.
The furthest I know in Ontario is London. So
no, you can go to Windsor too. I believe you're from Windsor.
I know Windsor.
Yeah.
But I think when I look at the map,
you might be able to get a mention in Windsor.
in my mind, after London, you just drop in the ocean.
No.
It's the Pacific.
You will be dropping into the lake after Windsor, and then you will come out from the Detroit side, and you will be able to buy a big mansion for about $500,000.
And then we probably killed when going for groceries.
No, groceries will be cheap too.
I think that,
there's no guarantee for your security, but yeah, I mean,
you're also selling property in the US.
You can live in Detroit, and yeah, I mean, so, for 500,000, I mean, for 100,000, you might be able to buy something on cash.
I think we had this conversation the other day when we met that on a different note, if somebody's looking for like comparatively lower cost of living, especially lower mortgage payments, they can look at the US as a feasible market, especially like the Midwest, not the Midwest, but states.
You can go to central US.
Dallas,
you can go towards Houston.
Texas,
Houston is a good city to live in. But the question is, like, again, how many people would be able to go and buy a property there? You need to obviously be able to. If you're listening to this in US, yeah, I mean, you can take advantage of this. But for Canadians, it would be a bit of challenge in terms of like how you'll be moving and buying an investment property in US, managing it. So there will be a lot of challenges, and you also have to.
But can Canadians buy property?
They can, right? but
you can stay there for more than 6 months or something.
Yeah, that's immigration law. But obviously, you can get that's something different. That's beyond my expertise, and at least
of course.
I wouldn't like to comment on the immigration part, but. The question you would also need to ask yourself is, are you willing to go into a market which is pretty stable? I mean, if you're buying something for 500,000 in Houston, chances are it's going to be around 500. Maybe it will go up to 550 in a few years. While in Canadian market, there's a good chance that what you buy for 500,000 could be 700,000 in 2-3 years. I mean, don't be surprised if you see another run, and if we'll see prices jumping up another 10-15% in about a couple of years' time. So you got to keep in mind that what is your motive as an investor? Are you trying to just collect the rental income, or your motivation is not only that you collect rental income, but your main priority would be to build up equity, to gain from profits? So I know a lot of U.S. investors. I know a lot of Middle Eastern investors who have invested in Canada precisely for that reason, because they know they can get a lot more return out of their investment, and in a short period of time.
Excellent. Because I think in today's market, especially in the last few years, my preference have somehow shifted from equity to cash flows.
Yeah,
right? I just me, right?
Now, a lot of people feel that way.
Yeah, because now I think with rising cost of living, inflation, etc., I think cash flow
It's becoming more and more important.
is becoming more important, because now if I, instead of funding an asset or maintaining an asset, if that asset is generating cash flow, then I can use that to kind of offset the inflation.
I agree
in my
with
living
you, but then
expenses,
you have to look at
right?
the other side too. This is a great opportunity to buy something. A lot of people, if you look at in the last 2 years, what was happening is you weren't getting a lot of properties. You were not getting properties this cheap in Toronto area. I mean, yes, they are still up towards $1 million, but the thing is, they were selling for about 1.2, 1.3. So there is a window of opportunity for a lot of people to buy properties and to gain from that. But then again, it really depends on your
expensive.
financial situation. If you have the money,
If
this
you have
is
the
the
money,
best
then
time to
if
jump
you
in
have
the
the money,
market.
then they're probably watching some other channel.
That's the possibility. They're making the wrong choice. They should be watching
They're
this channel.
watching this channel because this is how where we
is how
show
you
you
make money.
how to
Exactly.
make money,
Exactly.
not how to spend your money.
And we're not charging anything for it.
Not yet.
Not yet. So use it while you can for free.
Of course, yes. And not that anybody is sponsoring this channel or anything, but any exciting challenges, projects you're working on, anything which is
There are a few projects. Obviously,
good
people
projects.
listening to this, they can ask me. They can send you a message. You can obviously let me know. But main thing is, like, if you're looking towards pre-construction, you have the extra money. With the inflation, there is no point. If you look at GICs, maybe you'll be lucky to get interest-bearing accounts. You'll be lucky to get about 3.54%, but your inflation is running closer to 6%. So you're still losing money. So there's no point keeping your money in the bank and losing money, I would say, even with GICs.
These
so
days,
you rather
the
invest
word-
in real estate.
these days the word bank is like a trigger word, right?
Especially with what happened with Silicon Valley Bank. But that's another topic. We'll be talking about that. That's going to be a pretty interesting one. Keep an eye on that. That's personally, I have a feeling that it could be a tip of iceberg.
Yeah.
But let's see. Hopefully not. Hopefully not. But yeah,
definitely. We don't want,
you don't want to
lose
see
money.
like one bank after another bank following this. Then yeah, we all gonna be in trouble. It doesn't matter what part of the world you live in. U.S. controls the world economy. If they go down, everybody goes down.
Everybody goes down.
And
Yeah, the system goes
living
down.
in Canada, we are probably the first victims. So we don't want that. We don't want that.
Definitely, we don't want nobody. We don't want that for anybody.
Yeah.
But I think I think the main situation right now is that especially the globe, but I think if you just focus on North America, I think the markets are quite volatile, and then anybody and everybody who has or who wants to build wealth, or at least I think for now preserve whatever they have, is either real estate or gold, right? That's what my feeling. Again, not investment advice or anything, but
Pretty safe here to play. Yes, I mean both of them.
And then
are
I think
considered historically.
unless you like Rolexes, maybe you can buy some Rolexes.
Yeah, they tend to hold the value.
Yeah.
But the question is, would you be able to find some?
Will you be able to liquidate?
No,
Not only find some, but there's a
wait time of last time I
there's
checked, there's a wait time of about 2 years.
there's a I think about a year.
Year for sure.
You can get it. I know a couple of people, but having said that, I think gold and real estate are probably the best vehicles for wealth preservation, and real estate obviously
Quite
is a good-
conservative. Not exactly my cup of tea because I think the growth is
Bitcoin?
still pretty slow.
What's your cup of
Bitcoin
tea?
is too risky.
What do I see in your
At the
cup
end of
of
the day,
tea?
I'm a real estate guy. I would always endorse real estate. I personally think that
No, but that's what
instead
I'm
of keeping
saying.
money in the bank, you should be buying something, whatever you
I'm
can
saying
afford.
real estate and
Yeah.
gold, preservation, gold and real estate, growth, real estate. But I think when we
But
talk about
gold doesn't exactly. If you look at the gold prices in the last few years, yes, they have gone up, but they have come down too.
of course
they are so dependent.
No, gold
on
is
US
just
dollars
gold
and
is just
if the US dollar becomes strong, gold prices
goes
will go down. So
No, but they don't go down as much
you know
as everything else.
that point where you need to. Let's just say you put all your assets into gold.
No, of course not.
But
Yeah.
would you know the time that you got to go back into US dollar or Canadian dollar or
No, you
any
can't.
of the economy?
Anybody who's doing these things, the first thing they'll probably go to a financial advisor, and the first thing the advisors tell you, kids on YouTube tell you,
Yeah.
that you have to diversify. So all I'm saying
Right.
is wealth preservation, gold, real
Yeah,
estate.
maybe keep a small part of it,
wealth.
but majority of your savings, majority of your wealth should be in real estate, because if you look at it historically, this is
Oh,
one
I
of
agree.
the safest investments
I agree.
that
I
will
agree.
most likely go up unless it's just you are having some really bad luck. At least over the long
I think this
run.
is, and I know this conversation is getting a little longer, but I think for next time, let's talk about the common ways an average Joe can build wealth.
That's a good
Right?
topic. Yeah.
So we're saying, there's gold, there is real estate, there is equity like stocks and everything, there is bonds, mutual funds, there is entrepreneurship or business ownership. I think we need to talk about these things. And then, as you said in the beginning of this conversation, all of these things are dependent on your risk appetite, where you are in life, what kind of
And where do you live?
capital and principal you have,
Yeah, where do you
the
live?
laws and the taxation, and in your region, in your area where you live. That'll be a good conversation. That'll probably be a change from real estate, but then a more broader
Another
wealth
perspective.
accumulation
Absolutely,
conversation.
absolutely.
All right, sir. Anyway, sir, thank you very much for your time.
You're welcome.
And
Always a
we
pleasure.
hope to see you next time as well. And thank you for giving us a ride in your car.
To this beautiful town of Milton.
Beautiful snowy town of Milton. Our favorite renovated Tim Hortons across the road there. Right?
Which, as a Canadian, obviously you gotta. Doesn't matter what you do for a living, you have to come to Tim Hortons to have
You
a
have to buy
business meeting.
Of course, of course. All right, sir. Thank you very much.
You're welcome. Always a
Take
pleasure.
care.
Take care.
Thanks everybody for watching. See you guys in the next one. Take care. Bye.